Hi, it's Nicole. Welcome to Personal Finance Basics. This is Lesson 7, Next Steps for a Positive Cash Flow. If you've determined by looking at your budget that you're in a positive cash flow, that means you're overall in a good situation financially. So here are some tips to help you on what to do next. As we discussed in Lesson 2, positive cash flow means that you have basically money left over at the end of the month. You have more money coming in than going out. So this is always definitely a good thing. So you might still be having problems if you're in a positive cash flow and be coming up short at the end of the month. So if you want to look at your budget and see, and you're seeing that you have money left over after paying your bills, the first thing to look at in this case would be your online banking. So look at all the transactions that aren't bills and write them down by category. Do you spend money on eating out, subscription boxes, coffee, stuff for the kids, lunch at work? I mean, it can be anything. Do you like shopping? I like shopping. So if you have problem spending areas, make sure you start working on those and just looking at things a little bit more closely. And that can help go a long way to improving your finances. No matter where you are with your finances, it's always important to put money in savings for a rainy day, as the saying goes. And some important advice to follow is to always have money in your savings account to pay about 3 to 6 months of your bills, and that would be like your rainy day fund. So once you have that, then you can start looking at other investments. Things to ask yourself when you're choosing a savings plan are, do you want the money to be easily available? How much do you want to save? How long do you have until your retirement? Are there any big purchases you're paying for? And do you own a house? Because otherwise you might be saving for a house or something of that nature. So all these questions, you just want to make sure why you're putting aside money to determine how much you want to save every month. There are many different types of savings products. In this class, I'm going to talk about high interest savings accounts, universal life insurance, retirement accounts, and investment accounts. A high interest savings account is just what it sounds like. It's basically a savings account that has a higher than usual interest rate. And a lot of times they have additional restrictions on them, such as you have to have a certain amount of money to start them, or that you may only be able to take money out a certain amount of times a month. This is a good product if you want to earn some interest, but you still want to have easy access to your money. A lot of good ones. I have one from American Express, and there's many other large banks that have them as well. You can Google what are the best high interest savings accounts for 2022, and it'll give you a list of all the ones that currently have the highest interest rate that they're paying and what their requirements are. Universal life insurance is also a good product to have, especially if you have kids or other type of dependents, because life insurance is good in general, but the difference between universal or whole life policies and a term life policy is that you have them for life. So what you do is basically it charges you your life insurance, but it also acts dually as a savings account. So you pay a little bit extra on your life insurance every month, and your death benefit will go up. So if something was to happen to you, you would get a little bit more money than what the face value of your insurance is. So for instance, if you got 100,000, it's building cash value, so you might get 105 or 110,000 instead. And another benefit of these is that you can take out loans on them on that additional amount. So for example, if you went up to 105,000, that 5,000 would be available for you to take out a loan against the policy and pay it back with a lower interest rate than other type of loans. And also, when you get to your retirement age, you can take out monthly payments as well. It's a special benefit of this type of policy. And when they write it for you, they'll tell you exactly what you're going to be getting every month at your retirement age. There's also other different types of retirement accounts that are beneficial as well. Many are through your employer or through the military if you're in government service. And there'll be special different account types that you're eligible for. And otherwise, you can apply for a 401k or an IRA account on your own through your bank. And these are all very good type of plans because they're tax deferred, which means that the money will come out of your paycheck before you're taxed. So that's always very helpful because you're putting as much in savings as possible and maximizing your investment. And as we talked about in the previous lesson, a lot of times your employer will have a class once a year or something when you sign up for your benefits where they will talk to you about your retirement accounts and what type of options are available to you. And that's also when you would decide how much you're going to invest in your retirement account as well. And if you're not going through an employer-sponsored plan, you can talk to either your bank or your financial advisor about what may be best for you. There's many other different type of investing accounts available, including stocks, funds, mutual funds, CD accounts, or Bitcoin, or other things like that. So these type of accounts are going to have a higher risk than the previous type of accounts we talked about. So it's always good to talk to some kind of financial advisor or investment broker when you're investing in these high risk type of accounts to make sure that you're putting your money in the best type of investment that you can. Set it and forget it. This is one of the things that I really like with our modern internet banking is that whatever type of savings product you choose, or more than one because it's good to diversify, then you can always have things automatically withdrawn from your account every month. So if you decide to invest $10 a month, you can just have that automatically go to your savings account or your retirement account or whichever other account, and then you don't have to think about it. So doing that automatically, and especially setting it either at the beginning of the month or the beginning of your pay period, makes it come out as one of your first bills. And then when you go to your budgeting spreadsheet, you want to add your savings on there as well, just like it's a bill. And that way you're budgeting for this every month and you're saying, okay, whatever I'm going to spend this month for fun things is on top of my savings, because you want to make sure that you're not cutting back your savings just so you can buy extra Starbucks or something. You know what I mean? So now you're on your way to a great financial future. You have a budget. You've learned about collections, credit cards, and also savings products and investments. So if there's any other topics that you'd like me to cover in this series, let me know down below in the comments, and I'm happy to tackle other topics for you as well. Thank you for joining me in the Personal Finance series. You guys have a great day. Thank you very much.